Hi there, welcome to Kneppy Invest. I have done quite a few Ansarada videos in the past since I listed back just before COVID-19. In fact, when we look at the long-term chart, you'll see the company listed and the share price fell off an absolute cliff because it was not the best timing in regards to listing on the ASX. But the reason I have done quite a few videos on this company is twofold. First of all, I really like the name. And that's a ridiculous reason to do a video on a company, but Ansarada and how it's derived. And if I don't talk about that in today's video, you can just go back to one of my previous videos. And the second reason I have done quite a few videos on this company, and by far the most important reason, is because whenever they release an Appendix 4C or a quarterly update, typically they are operating cash flow positive. This is very important to have that word operating. So even though they are operating cash flow positive, when you do a deeper dive in the company, they are typically not free cash flow positive. The other thing is when you look at the half year, full year results, typically they are EBITDA positive, but they're not profitable. And there is a big difference. And the reason why typically they are operating cash flow positive and EBITDA positive, but not free cash flow positive and not profitable, comes back to the way they deal with research and development. So they capitalize it, which means every single year there is a fair bit of amortization because this company does a lot of research and development, which is fairly typical for a lot of these software companies. They do a lot of research and development, and most of them do capitalize research and development, which means they will focus, or the management will focus on EBITDA. These are our EBITDA. But because they're not profitable, because a lot of amortization, they won't really focus on those numbers. So again, they'll also focus on operating cash flow and not focus on free cash flow. And I will look at that today, that difference between EBITDA and profit, difference between operating cash flow and free cash flow in today's video, as we do an Ansarada half-year update for financial year 23. One of the main reasons I do like Ansarada is the very fact that they are operating cash flow positive, they are EBITDA positive. The second reason I do like this company is that they're into virtual data rooms, and they have a very impressive client base, including some of the biggest companies in the world, some of the biggest investment banks in the world, which makes sense because virtual data rooms is all about making life easier for deal makers, in terms of acquisitions, mergers, and stuff like this. Hence why investment banks love Ansarada. Now, the silly reason why I also like this company is just the name and how it's derived. So if you just take the first two initials of the founders of this company, which is Andrew, A-N, Sam, S-A, Rachel, R-A, and Daphne, D-A, you get the name of the company, Ansarada. Not only that, I think Sam is the CEO of the company, and I do like skin in the game. So I do like founder-led companies, and also the founders of this company have quite a bit of skin in the game in terms of holdings in Ansarada. Ansarada was formed in 2005 when Andrew, who was a software developer, and Rachel and Daphne, who were two accountants, were partaking in a merger, and they were really frustrated about the lack of virtual room, data room options. And hence, this happens a lot in history. When employees of a company become very frustrated about something to do with the company or something to do with the business, they see potential. They see potential of a new business to solve whatever problem they see. Hence came along Ansarada in 2005 to solve the problem of a lack of virtual room, data room options. The company listed on the ASX in the 9th of December 2020 via the Dockyard, sort of like a reverse takeover of the Dockyard. The CEO and co-founder of the company is Sam Riley. He has 5.6% stake in the company. Andrew Slavin, the software engineer, he has 7.1% stake. So there is a fair bit of skin in the game right now. And one of the other larger shareholders in Ansarada is Net Wealth. They've actually increased the stake up to 5.9%. Now, the market cap of this company has been falling because this company has been caught in the tech sell-off over the past 14 months. So the current market cap of Ansarada at $1.13 is $100 million. And the ticker for this company is a pretty boring AND. Now let's have a look at the half year results. So we're going to be focusing on a few things I do look at for most companies. And whenever I do look at the financial statements, I typically start at the cash flow statement and then work my way backwards. And in today's video, we're just going to look at the cash flow statement and then look at some other interesting aspects of the financial statements. So most importantly, this company didn't grow the cash receipts all that much in the first half of financial year 23 compared to financial year 22. They increased it from 26 million to 27.8 million. And last year, they were operating cash flow positive by 6.6 million. In this particular half year, they were actually operating cash flow negative. Now, if you do take a look at the second quarter, they were operating cash flow positive by almost $3 million. So they did turn things around in terms of operating cash flow in the most previous quarter. But this company does capitalize their research and development, and that is in the cash flows from investing activities under capitalized development costs. And in the most recent half year, that was 2.3 million. In last year, it was 2.8 million. So they do spend a fair bit of money on research and development in their software. So if you just focus on the operating cash flow, you don't or wouldn't take into account the fact that they do capitalize research and development, and that is a fairly big annual and half-year cost, which means they were highly free cash flow negative. In fact, if you take into account the outflows from financing activities, the decrease in cash and cash equivalents for the half year was almost or just above $4 million. Now, one thing I look at for every single company is how their revenue is derived, particularly if a company has different divisions or segments. And Ansarada has two particular segments: platform subscription revenue and transactional revenue. And companies usually do give a bit of a definition. And the definition for subscription revenue is just those comprising recurring annual and monthly fees from customers who subscribe to Ansarada's cloud-based SaaS platform. Transactional revenue represent the amount billed to the customers based on the specific level of virtual data room usage. Example, amount of data uploaded or page occupied. It's very important to know in subscription revenue, those fees can either be invoiced upfront or over the subscription period, accounting for deferred revenues. By far, most of the revenue for Ansarada is in the platform subscription revenue, and that rose 15% over the past year. Transactional revenue actually dropped 4% from financial year 22 to financial year 23. Another thing I do like to look at is revenue by geography or geographic region. I like to see if a company has worldwide reach. Some companies on the ASX only have revenue in Australia, so they're happy just being situated in Australia. Some companies are trying to expand overseas, and you can see how successful those expansion ambitions are by just looking at the revenue in each geographic location. For Ansarada, they are a worldwide company. They do have revenue throughout the world, including ANZ, North America, Asia, Europe, Middle East, and Africa. And it seems like they have separated United Kingdom from Europe, which is understandable because the revenue in the United Kingdom makes it the fourth largest geographic region. By far, so even though this is a worldwide company, by far, the majority of the revenue, more than half the revenue, comes from Australia and New Zealand, 14.6 million. The second biggest market is Europe. Unfortunately, revenue dropped 8% in Europe. Their third biggest market is North America, revenue up there, 23%. Fourth biggest market is United Kingdom, revenue up 17%. They also have operations in Asia, revenue up 40% there, and also in Middle East and Africa, and revenue up 18% there to $1.4 million. Now onto what I was discussing at the start of the video in regards to Ansarada and how they are unprofitable and free cash flow negative, yet are operating cash flow positive. And if you look at their EBITDA, and they do really sing about their EBITDA, they are EBITDA positive. In fact, in the first half of financial year 23, they were adjusted EBITDA positive by 2.8 million, yet were loss-making by 4.6 million. So how can that be? And this particular table was found in their financial statement. So all this information can be found quite easily if you do look in depth at their financial statements. In this particular table, they start at their loss for the year, which was 4.6 million. And then they work their way backward to how they were adjusted EBITDA positive by 2.8 million. And the main reason there is a large difference between the two is because of depreciation and amortization. And that amortization is pretty high because they do capitalize research and development. So some of the other things they also do is non-cash share-based expense, which was 723,000, one-off consulting costs, 747,000, depreciation right of use asset, 388,000, and non-cash impairment intangible assets, 344,000. So that is a reason why this company is unprofitable, but if they just look at the EBITDA, it is profitable. Now, I just realized I might have contradicted myself earlier because I said or stated that Ansarada listed on the ASX pre-COVID-19, and then they listed on the ASX in the facts section of this video in December 2020, which was post-COVID-19. Now, just to clarify that, the Dockyard, a company called the Dockyard, listed on the ASX pre-COVID-19, and then the Dockyard merged with Ansarada in December 2020. So that first part of that merged entity, the Dockyard, listed on the ASX before COVID-19, and then that merged entity came into being in December 2020. So I just want to be clear. And I realized I made that contradiction when I looked at this cash receipts history, and that's sort of a light bulb just flicked off in my head. So if we do look at the receipts history, and this is something I look at every single company, I look at the revenue or cash receipts history. And Ansarada does show a good growth in the cash receipts. Maybe not good, but a consistent growth in the cash receipts, increasing from 9.4 million that first quarter when they were, or after they merged with the Dockyard, up to 15.4 million. Now there is, and it's only a sample size of 2, there is an indication that possibly the December quarter is their best quarter, because 1 year ago, there was a nice $3 million jump in cash receipts from 11.5 million to 14.5 million, and the cash receipts fell. And then has been another 3 million jump in cash receipts between the September quarter and the most recent December quarter, up from 12.4 million to 15.4 million. So potentially, this company does have a really good December quarter, just based off a sample size of 2. But anyway, there is a growth in receipts. If you put a trend line here, receipts are growing through time. And that's the most important thing. You want to see revenue or cash receipts growing through time. Now, one thing you'll notice if you do look at an Ansarada presentation or the financial statements is they really focus on cash flow from operations and EBITDA, which is understandable because they are cash flow positive for most quarters or in most quarters, and they're also EBITDA positive. So if they focus on the profit and focused on the net cash flow, that probably would not be as good a look. You want to focus on the positives, and definitely by focusing on the cash flow from operations and the EBITDA, that is a positive. So here is a history, 6-quarter history of their cash flow from operations, and most quarters they are highly operating cash flow positive. The only one was the first quarter of financial year 23, which they were only negative by $300,000. Now to the charts for Ansarada. So this particular chart goes back to when the Dockyard listed on the ASX just prior to COVID-19. And that company as a standalone entity didn't last very long because they merged with Ansarada back in December 2020. You can actually see massive volume coming in towards the end of 2020. That's when the merge announcement came to be. And then there was a little bit of negative sentiment in the market around that time because the share price actually did fall for a while. In fact, it fell down to below $1 for a brief period in April 2021. And then the share price absolutely took off through the rest of 2021 into the start of 2022. Share price increased from just below $1 to a high of $2 and about 68 cents or something like that. And that peak in the share price was in February 2022. And then the general tech sell-off brought bad news to Ansarada's share price and the valuation of the company, and the share price has been falling ever since then. So the share price hasn't quite reached the lows we saw back in April 2021, but it's getting close. If we take a look at the daily chart for Ansarada, and this goes back to the start of 2022, just wanted to include when the share price did reach its peak. That was in February of that year. Share price reached a high of about $2.65 to $2.69. And ever since that peak in the share price, the share price has been in a really well-defined downtrend. We know it's a well-defined downtrend because if you look at the highs and the lows, the highs keep falling, the lows keep falling. And that's the very definition of a downtrend. And the most recent low was only a few days ago. And the share price reached a low of about $1.07. And then we've seen a little bit of a bounce the last few trading days. But a definite downtrend here for Ansarada. And what I want to see is an end in sight to this downtrend. So the best scenario would be for the share price just to go sideways. Or maybe the best scenario would be a really good financial announcement from the company. Maybe they have reached free cash flow positiveness or profitability, and that would port a potential or see a potential shift in sentiment for the company. But because of this general tech sell-off, particularly in unprofitable tech companies, Ansarada has been a part of that tech sell-off. Share price has fallen from about $2.68 all the way down to just above $1. So about a 66% decrease in the share price over about a 1 year period. When is the end in sight to this downtrend? Who knows? It could fall significantly further from here. We just don't know. But the share price is in a downtrend. And until the share price shows signs that the downtrend is coming to a completion, there's no reason, in my opinion, to even think about taking position in this company because they are still unprofitable, still free cash flow negative, and there is always that potential that they'll have to do a capital raising in the future if they don't become free cash flow positive and profitable. That's all I have for this half-year update to Ansarada. So even though I've done a fair few videos on this company, maybe I'll just hold back from now on. Just wait for that very important inflection point of the company becoming profitable, becoming free cash flow positive. So until then, I'll leave this company on my watch list, particularly because the share price is in a really well-defined downtrend. We don't know how much further share price has to fall from here. It could fall to 50 cents, it could fall to 25 cents, or maybe the low has already been reached at about $1.05. And maybe now the share price will go sideways, or maybe the share price will go up and move into an uptrend from here. We just don't know. The best thing for Ansarada and the management is for this company to be profitable, for this company to be free cash flow positive. And until then, I will remain on the sidelines. I'll just wait for that company to reach that very important inflection point. If you have any questions about Ansarada, any thoughts about this company, I'd love to hear them. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.